Good morning, sir. My name is Lakiri Safitri. I'm from Accounting D. This is my video record about the article Accounting Equation Definition. What is the accounting equation? The accounting equation is considered to be the foundation of the double entry accounting system. The accounting equation shows on a company's balance sheet whereby the total of all the company's assets equals the sum of company's liabilities and shareholders' equity. Based on the double entry system, the accounting equation ensures that the balance sheet remains balance sheet and each entry made on the debit side should have a corresponding entry on the credit side. Accounting equation formula: asset equals liabilities plus owner's equity. Calculating the equation. The balance sheet holds the basis on the accounting equation. Locate the company's total asset on the balance sheet for the period total all liabilities, which should be a separate listing on the balance sheet. Locate total shareholders' equity and add the number to total liabilities. Total asset will equal the sum of liabilities and total equity. What does the equation tell you? The financial position of any business, large or small, the asset sheet based on two key components of the balance sheet, asset and liabilities. Owner's equity or shareholders' equity is the third section of the balance sheet. The accounting equation is a representation of how these three important components are associated with each other. The accounting equation is also called the basic accounting equation or the balance sheet equation. While assets represent the valuable resources owned by the company, the liabilities represent its obligation. But liabilities and shareholders' equity represent how the assets of a company are financed. If it's financed through debt, it's show a liability, and if it's financed through issuing equity share to investor, it's show in shareholder equity. The accounting equation help to assess whether in the business transaction carried on by the company are being accurately reflected in the books and account. Below are example of them listed on the balance sheet. Asset included cash and cash equivalent or liquid asset, which may include treasury bills and certificates of deposit. Account receivable are the amount of money owed to the company by its customer for the sale of its product and service. Investor is also considered an asset. Liabilities. Liabilities are what a company typical owners or needs to pay to keep the company running. Debt including long-term debt are liabilities as well as rent, tax, utilities, salaries and rates as well as dividends payable. Shareholders' equity. Shareholders' equity is company's total asset minus its total liabilities. Shareholders' equity represents the amount of money that would be returned to shareholder if all of the assets were liquidated and all of the company's debts was paid off. Retained earnings are part of shareholders' equity and are equal to the percent of net earnings that were not paid the shareholders as dividend. Think of retained earnings as savings since it represents a cumulative total of profit that have been saved and put aside or retired for future use. The double entry system. The accounting equation forms the foundation of the double entry accounting is a concise representation of a concept, the expand to the complex, expand and multi-item display of a balance sheet. The balance sheet is based on the double entry accounting system where total assets of a company are equal to the total of liabilities and shareholder equity. Essential, the representation equates all use of capital to all resource of capital where debt capital leads to liabilities and equity capital leads to shareholders' equity. For a company keeping accurate accounts, every single business transaction will be represented in the list it to account. For instance, if a business takes a loan from a financial entity like a bank, they borrow money will raise the company's asset and the loan liability will also rise by an equivalent amount. If a business buy raw material by paying cash, it will lead to an increase in the inventory while reducing cash capital because there are two or more accounts affected by every transaction carried out by a company. The accounting system is referred to as double entry accounting. The double entry practice ensures that the accounting equation always remain balanced, meaning that the left side value of the equation will always match with the right side value. In other words, the total amount of all assets will always equal of sum of liabilities and shareholders' equity. The global adherence to the double entry book entry accounting system makes the account keeping and tallying process much easier, standardized, and foolproof to a good extent. The accounting equation ensures that all entries in the books and record the fact and a variable relationship exists between each liability and its corresponding resource or between its item of income or asset and its source. The accounting equation is considered to be foundation of the double entry accounting system. Real world example.